Did you know that 10,000 baby boomers turn 65 every day, and that 70% of people over the age of 65 will need long-term care in their lifetime? Families across the United States are struggling with how to pay for the cost of long-term care. Not enough people plan for the almost certain eventuality that they will need to pay for long-term care for themselves or a loved one. The costs of long-term care increase every year. In fact, the monthly cost of home care or an assisted living community can easily reach $5,000 and can last 3 to 5 years. Almost half of people who will require long-term care in their life will end up in a nursing home. But Medicare will only cover the first 100 days of rehabilitation in a nursing home. After that, you either need to have private pay resources or go on to Medicaid if you can qualify. One overlooked solution that is in the hands of millions of Americans is converting a life insurance policy into a long-term care benefit plan that can pay for any form of home care, assisted living, memory care, or nursing home care. Before abandoning a life insurance policy, the owner should always find out what the conversion value of the policy is first. Insurance agents, legal professionals, or the staff at assisted living communities, home care companies, or a nursing home can help you find out more information on how to use a life insurance policy to help pay for long-term care expenses for yourself or a loved one. Did you know any type of life insurance policy can be converted to pay for any form of long-term care? All types of life insurance can qualify to be converted into a long-term care benefit, including term life, whole life, universal life, and group life policies. Cash value doesn't matter in a policy conversion because it's the death benefit that is being converted into a living benefit. There are no costs or obligations to apply for a policy conversion. The underwriting process is very simple, and the entire enrollment from beginning to end takes about 30 days. Once a policy has been converted and the long-term care benefit is set up, monthly payments immediately start being made to any form of senior care that's desired. The benefit will pay for home care, assisted living, memory care, a nursing home, or hospice care. The benefit plan is designed to be flexible to meet the changing needs of care. So for example, the benefit could start out at $1,000 a month for home care services, but then switched at a later time to $5,000 a month to pay for assisted living if the person's need for care have changed. Thousands of senior care providers offer this funding option to help families pay for care. And some of the biggest assisted living and home care companies in the United States work with Life Care Funding every day to help families in need of care. Did you know it's quick and easy and there are no fees to enroll in a long-term care benefit plan? Life Care Funding does not charge any fees and there are no obligations to apply for the long-term care benefit plan. The application is a very short form that takes about 5 minutes to complete. If a person has an in-force life insurance policy with a death benefit range of between $50,000 and $1 million, they could qualify to enroll in the long-term care benefit. Term life, universal life, whole life, and group life all qualify to be converted into a long-term care benefit. The entire enrollment process takes about 30 days from start to finish, with monthly benefit payments being made to the person's senior care provider of choice. A person can select any form of senior care they want, such as home care, assisted living, memory care, skilled nursing, or hospice care. And the benefit account is flexible, so it can be adjusted to move from one care provider to another, or the monthly benefit amount can be adjusted as care needs change. The benefit plan will also provide a final expense payment to help with funeral costs. And if a person should pass away with any money still in their benefit account, the entire balance will be paid to their family or a designated account beneficiary. The long-term care benefit is a Medicaid qualified financial option to address an immediate need for long-term care services. So instead of lapsing or surrendering a life insurance policy, the owner will get a much higher value that will help them pay for the expensive out-of-pocket costs of long-term care. Did you know every home care, assisted living, and nursing home company in the United States accepts funding from a long-term care benefit plan? Life care funding is endorsed by over 5,000 assisted living communities, home care providers, and nursing homes across the United States that offer the long-term care benefit to families as a way to help them pay for care. Policy owners can also learn more about how to qualify for a long-term care benefit through their financial, insurance, or legal advisor who would be happy to assist in a policy conversion. A long-term care benefit plan is a protected account that makes monthly payments automatically to the care provider of choice. As long as the benefit account is in use, the person receiving care is considered private pay. Private pay individuals remain in control of their own decisions and do not have to go on to Medicaid. Private pay individuals are also preferred by home care providers, assisted living communities, and nursing homes. And for the most part, home care and assisted living only accepts private pay. Seniors want to remain financially independent and don't want to become a burden on their family or a ward of the state by entering Medicaid. Unfortunately, the current system to fund long-term care has evolved into one that encourages seniors to impoverish themselves and move towards Medicaid as quickly as possible. For the wealthy, long-term care costs are easily covered. For the poor and disabled, Medicaid is available. But what about the majority of middle-class Americans that need access to long-term care today? One solution available to millions of people is to convert a life insurance policy instead of abandoning it so they can remain private pay and access any form of care that they want. Did you know a long-term care benefit plan is a Medicaid qualified spend-down that helps a policy owner stay private pay as long as possible? A life insurance policy is an asset of the policy owner and it counts against them when applying for Medicaid. But by converting an existing life insurance policy to a long-term care benefit plan, the owner is spending down the asset towards their cost of care in a Medicaid compliant manner while still preserving a portion of the death benefit for their family. A long-term care benefit plan is the conversion of an in-force life insurance policy into an irrevocable, FDIC-insured benefit account that makes monthly senior care payments on behalf of the individual receiving care. This option extends the time a person would remain private pay and delays their entry onto Medicaid. When a person is private pay, they can choose the form of care they want and remain financially independent. Assisted living and private duty home care do not accept Medicaid or Medicare. Surveys show that people mistakenly think Medicare will cover their long-term care needs. But the fact is, Medicare will only cover the first 100 days in a nursing home, and most often it is Medicaid that will end up covering care in a nursing home. If a person goes on to Medicaid, it means they have become a ward of the state because they are below the poverty line and they are not able to choose the form or place of care that they want, and that person will typically have to share a room. People prefer to remain private pay and in control of their health care choices. Converting a life insurance policy into a long-term care benefit plan is a Medicaid qualified spend down, as it keeps a person private pay and off of Medicaid for as long as possible. Did you know it's your legal right to convert a life insurance policy into a long-term care benefit plan? Life insurance is legally recognized as an asset, and your property ownership rights are guaranteed by the Supreme Court. The long-term care benefit plan is a unique financial option for seniors because all health conditions are accepted. There are no wait periods, no care limitations, no cost to apply, no requirement to be terminally ill, and there are no premium payments or anything you will ever have to pay back. Policy owners use their legal right to convert an in-force life insurance policy to enroll in the benefit plan, and they are able to immediately direct payments to cover their choice of senior housing and long-term care costs, including home care, assisted living, memory care, and nursing home care. In recent years, state legislatures and advocacy groups have been working together to introduce laws making sure that policy owners are informed that they can convert their life insurance into a long-term care benefit plan. Consumer protection disclosure laws championed by Life Care Funding have been introduced in numerous states to make sure people are informed that instead of abandoning a life insurance policy to go on to Medicaid, They have the legal right to convert the policy into a long-term care benefit plan and then choose any form of care that they want. We are proud that these consumer protection measures are based on LifeCare Funding's program, and we have helped to write bills and have been invited to provide expert testimony in numerous states. Advocacy organizations such as the American Healthcare Association, the Assisted Living Federation of America, and the AARP in Florida have all spoken out specifically in favor of this approach to funding long-term care. Did you know a long-term care benefit plan is not a loan on the policy or long-term care insurance? A long-term care benefit plan is not long-term care insurance, and it's not a policy loan that costs fees and interest and must be paid back. When a policy owner converts their life insurance policy into a long-term care benefit, there are no fees, no premium payments, no interest charges, and nothing is ever paid back. The policy owner is actually obtaining the maximum present-day value of the policy and then protecting those funds in an irrevocable benefit account that keeps in private pay. The policy is no longer considered an asset that could count against them for future Medicaid eligibility. In a policy loan, in addition to high fees and interest payments, the policy itself is collateral securing the loan and interest, which means that until the loan is paid back, the policy remains an asset that counts against the policy owner for future Medicaid eligibility. With a long-term care benefit plan, the policy owner will never pay any fees, interest, and nothing is to be paid back. Enrollment in a long-term care benefit can take as little time as 30 days and will start making immediate payments to cover any form of senior care. Long-term care insurance is purchased before a person needs senior care. The younger and healthier a person is when they purchase insurance, the lower the premium payments will be and the more options they'll have. A person who would qualify to purchase long-term care insurance would be too young and healthy to enroll in the long-term care benefit plan. But by comparison, a person who qualifies to convert their life insurance into a long-term care benefit would be too old or sick to buy long-term care insurance. If a person owns a long-term care insurance and life insurance, they can convert the life policy and use both together to make sure they maximize their senior care options. Did you know that there are 4 primary forms of long-term care? Long-term care is not a subject that people spend much time thinking about unless they need it. Until most people focus on the subject, they have a vague sense for the various forms of care and don't really know the differences between home care, assisted living, and nursing home care. A nursing home, is that something you visited a long time ago when your grandparents were there? Home care, is that care at home? Assisted living, sort of like a really nice nursing home? Well, here's a simple breakdown of the 4 primary forms of long-term care to help you better understand what they are and their differences. Home health care is care provided at various levels by licensed or unlicensed workers as well as designated family members. Home health is primarily private pay, but Medicare and Medicaid will reimburse some forms of medically necessary home health services provided by licensed practitioners for people meeting specific eligibility requirements. Assisted living is housing for the elderly or persons unable to live independently that will provide mid-level custodial care, medication support, lifestyle activities, transportation, and meals. Assisted living is a private pay environment not covered by Medicare or Medicaid. Nursing homes are higher level skilled care provided in a licensed facility for people requiring long-term medical or nursing care or short-term rehabilitation services for injured, disabled, or sick persons. Private pay is accepted and will allow for more choices such as private rooms, enhanced lifestyle options, and wider selection of locations. Hospice care is a specific form of care for people typically in the final 6 months of life as certified by a physician. Hospice care can be provided at home, in an assisted living community, a nursing home, or a freestanding care center. Private pay is accepted and not subject to requirements to be medically recertified every 60 days. The long-term care benefit covers all of these forms of senior care by converting an existing life insurance policy from a death benefit that may have been purchased many years ago into a living benefit to meet today's expensive senior care needs. Did you know Medicare and Medicaid will only cover certain types of long-term care, but a person that is private pay can choose any form of care they want? People are often confused about the differences between Medicare and Medicaid, how to qualify, and what they will cover. Medicare is for people over the age of 65 that will cover the first 100 days of rehabilitation in a nursing home if a person has been discharged directly from a hospital. Medicaid is for people below the poverty line that meet medical and financial requirements to qualify for care in an approved nursing home. Some home care can be covered by Medicare and Medicaid if the person meets the eligibility requirements. Assisted living is not covered by Medicare or Medicaid. Private pay means a person is paying for their care with savings, investments, private insurance, or through a long-term care benefit plan. When a person is private pay, they can choose any form of care they want. If a person wants to be in home care or move into an assisted living community, they can make that decision without worrying about government approvals. When a person converts a life insurance policy into a long-term care benefit plan, the monthly payments will keep them private pay for as long as possible. Also, there's no more premium payments, and the amount of the monthly payment is set by the family to cover the costs of care and can be adjusted as needs change. But because the benefit plan is a Medicaid qualified spend down, if a person exhausts their benefit account, they can make a seamless transition over to Medicaid. Finally, the long-term care benefit plan provides a final expense to help families with funeral costs, and if there is any remaining account balance, that will be paid directly to the family.